Well, already it's only just begun, but we're hearing explosive evidence coming out of the Banking Royal Commission. Interest-only loans, other types of predatory loaning to people, credit card debt bursting out of control. We're also hearing from some pretty extraordinary behaviour from banks, cash for loans, bribery rings at National Australia Bank branches. Someone who's been watching very closely is Martin North, who is a local financial analyst based in Thirroul, and he joins me now. Martin North, good morning.
Hello there.
Look, you've been watching this via webcast, as I understand, at the Banking Royal Commission.
Yes, indeed. Yes, it's been quite riveting. Watching. I guess I will follow these things quite closely. But it's amazing some of the things that came out yesterday. It's probably a lot of people had sort of guessed that there were a few issues to be explored, but boy, we certainly saw a few yesterday.
Okay, so you were actually surprised by some of these allegations. There were some things written about yesterday. The Royal Commission doesn't have a lot of time, and so they're focusing on just a few particular issues. They're not going over old ground, things that have already been revealed about the behaviour of some of the banks. Were you surprised by some of what you've been hearing over the last day or so?
Yeah, well, the process is really interesting because what they're doing is they're forcing the banks to spill the beans on things which they knew inside their organisations but perhaps hadn't disclosed, right? So there's a sort of a, dirty washing in public thing going on, firstly, which is quite interesting. But what's more interesting is that the degree of issues, particularly, bad behaviour, which we're starting to see, looks to me to be not just a few bad apples, but really quite systemic and structural. And I think it goes back to fundamental questions about how bankers are remunerated, how they think about their customers, and, if you go in for a loan, you perhaps would expect the banks to be giving you good advice and best advice, but perhaps that isn't what's happening. So I think it does raise a really, some troubling questions.
And there are, I guess, two ways of looking at this. There's one, the behaviour of bank employees, and how the culture of banks can lead to what some of us would see as unethical behaviour. And in some instances, some people might be scratching their heads and thinking, is this actually legal behaviour? And then there's the other side of the coin. What impact is that behaviour having on us and what we do with our own money? Just on the first issue, some of this behaviour we're talking about that seems to be inculcated in the culture of these banks, I mean, is some of it bordering on illegal, what we're hearing about here?
Well, it seems to be that, some of the discussion was sort of hinting that they could be crossing that line. I guess there's a moral line and then there's a strict letter of the law line, right? And it seems to me that the moral line has definitely been crossed. There's no doubt in my mind that people have been persuaded to get loans they should never have got in the first place. Interest-only loans is a good example of that. That there are people with large credit card debts that they should never have been able to get. So we know about that. But it's even worse than that because it looks to me as though laws could be being broken even now. And also, banks knew about some of these things going on inside their organisations and then didn't follow the regulatory procedures and disclosure procedures that they were required by law to do. So it does look pretty bad. Now, not all banks maybe will be, shown in the same light, but I guess we know enough now to think that this isn't just, a few blips around the edge. This is a fundamental set of cultural and behavioural issues inside our banking system. And remember that this is a huge part of the overall economy, and, almost everybody has relationships with banks. But, to what extent trust is going to be able to be restored after this, it's going to be an interesting question.
Because as you say as well, there are degrees of some of this behaviour that maybe blurs an ethical line here. So you have the flat-out fraudulently signing or documents or fraudulently filling out documents on the part of mortgage brokers or whoever to try and get people loans that they shouldn't be getting. But then there's the more subtle stuff of sitting down with your bank manager or your mortgage broker and then saying, you'll be fine paying this one off. Hey, you don't need to pay interest just yet. Don't worry about it. Or, yeah, you can easily up your credit card limit and you'll be able to pay it back. No worries. That's much more subtle, isn't it? And that's probably the stuff that affects more of us Joe Blows on the street.
Yeah, I mean, I think there's a mutual obligation, right? So if I'm a borrower wanting to get a loan, there's an obligation on me to tell the truth and to provide, appropriate information to the banks so that they can actually, make a decision based on that information. And probably in some cases we've been a little bit flexible with some of that because we really want that loan. We really want, whatever it is we want to get, right? So that's the first one. But the second part is there is a huge obligation on the banks to not just take that, and say, yeah, fine, but actually to think about it and to think about it in the context of that particular borrower. Is it appropriate for them? There's a thing called not unsuitable. In other words, is this loan suitable or not? And that means, do they think you can pay it back? Do they think that you might get into financial difficulty if you took the loan? Now, it seems to me that not unsuitable test is actually one which doesn't look to me as though in some cases has been followed. In other words, people have got loans they should never have got in the first place. And then, of course, when things go wrong down the track, and, of course, quite often it's a few years down the track, then, of course, there's rocks being thrown one side to the other. Oh, I didn't tell you this, or you didn't tell me that, or I blame the broker. So yeah, this is really messy. We have to change the culture, I think, of the way that banks behave. We have to actually raise the awareness in the community of the fact that when a bank says you can get the loan, that doesn't mean that they think you can automatically repay it necessarily. You've still got to take some obligation as a borrower, right? Yeah. But I think the other point is we've wired in now debt into our society to the point where everybody seems to have debts, large debts. We've got a massive mortgage bill. We've got
people are comfortable owing extraordinary amounts of money these days, and I know for my parents' generation would be horrified at having credit card debts that most of us walk around with without even thinking about these days.
Well, I guess partly because interest rates are so low, so you could almost say, well, the Reserve Bank's got, part of the blame here because they've taken rates really, really low, and that means that we don't pay as much back in terms of interest. But no, it's an attitudinal thing, right? I think debt has become normalised, and we just think it's the way to go. And of course, in many cases, you need debt because if you're going to, buy a property because prices are so high and you need a big mortgage, it's understandable. But I think we've got to think much more carefully about this whole thing. Here's the problem. Ultimately, we've got more debt in our population than almost any other country in the world at the moment, right? And what that means is that over time, that debt has to be paid back. And that means that we've got less disposable money to do other things with. We've got more of our commitments, just servicing those debts. So whilst the banks may get larger and their balance sheets get bigger and profits get, actually the economic impact on the broader economy and on households is very severe. And I think if out of the back of the discussions around the Royal Commission, we have a more mature discussion about debts and the way that they're offered to us and the way that loans are actually available, that'll be a really good outcome.
Good, because just very briefly, Martin North, you've made some pretty dire predictions about what could happen to the property market if this practice of people getting interest-only loans continues.
Yeah, so I've been looking specifically at interest-only loans. This is a big share of the property market. And, if you look at all the data that I've been looking at, you can see that if you go for an interest-only loan, you get a bigger loan on average. Actually, quite often people have multiple interest-only loans for multiple properties. So what that means is that you're paying back not anything to do with the capital repayments, just servicing the loan, right? Now, the assumption is that later you start repaying the capital. But now the banks have tightened up their underwriting standards, it's going to be harder for those interest-only loans when they get reset to be reset back to interest-only. So probably you'll have to get a more normal loan. Now, that will double your repayments. And my calculations is about 150,000 people across the country, 100 billion in loans is likely not to be able to be reset to interest only, which means that there will be people who will be forced to sell. That will put downward pressure on the property prices. And so I'm predicting that this interest-only loan thing is really our equivalent of the GFC thing in the US in 2005, 2006. It could be that bad. And perhaps, as a result, I'm thinking prices will slide quite a lot further than we've seen so far. So it's a big deal.
It is a big deal. Look, we'd love to keep in touch with you, Martin North, as the Royal Commission progresses, and maybe get some of your thoughts after we've heard some more of this evidence coming out about what could happen from here. We'd love to keep in touch if that's all right with you.
Yeah, I'd love to. I'll be watching this through the next few weeks, so feel free to reach me anytime.
Fantastic. Thank you so much. That's Martin North, financial analyst and a bit of a guru on all things finance and banking.
Breakfast with Melinda James
on 97.3 ABC Illawarra.